So let's look at the markets. It's the 1st of August 2025. We're looking at US 500 and NAS 100. These are 15-minute chart. So we've had NFP today in the New York session open. You can see right here, this is the New York session open. We've had NFP in US 500. We've had, NAS 100. We've had the New York morning session opening price right here, and this is the midnight New York opening price. So we've had London trading lower. We've had London trading lower, and then going into the early New York session, we've had price remaining inside this consolidation. So we're getting into August. Normally, index futures start trading lower going into August. There's normally as it called them, they're doldrums. I don't know. I'll have to figure that out what doldrums are, but normally index futures start trading lower going into the month of August. So we're looking at a 15-minute chart. I want to zoom this in. If you look at US 500 right here on my left on my chart, we had lower prices in London, and then we are also consolidating inside this range, kind of like the same thing we're doing in NAS 100. So my eye goes into this sell side here. We are remaining with 1 minute, and then we'll have the market opening just right about a few seconds. So I'm looking at this here, and my mind is like, we are trading inside a deep premium. My mind is like, we're trading inside a deep premium. So we'll zoom this in here. We're trading at a premium in regards to the weekly range, to the daily range, especially the daily range. It's a Friday. We're going into the weekly close, and I'm looking for, normally when I'm bullish, I'm looking for that run from the weekly high trading into the weekly close. That's what I'm normally looking at into Thursday and Friday. Yesterday we looked at price, and that's what we were looking for, and you can see how we had this movement lower from London highs. We moved lower, formed a premium opening range gap, and then we traded through that, the whole of that opening range gap. In US 500, it was even better because we had a new week opening gap, and you can see how we went through it, and then we found weakness going into the market and close orders macro. Then as well going into today's Asian session and today's London session, you can see we are bearish. So before we started the week, today is Friday. Before we started the week, if we go back to a weekly chart on US 500 briefly before we go to Nasdaq, my bias for the week was bullish. It was bullish, but we had bullish going into Monday, Tuesday, and if you let's 1 hour chart here. So you can see this is Monday. We opened up with a new week opening gap. Monday we had lower prices. We traded lower, and then we moved out from this low here, trading higher into the new week opening gap and midpoint of that new week opening gap in US 500. So we moved lower on Tuesday. We went below Monday's low. This was a deep discount. I was looking at this here, and when we are trading at a point like this here, I'm normally looking for higher prices. So it is not surprising to me we had this movement higher going into the Asian session on Wednesday. On Wednesday we had FOMC plus ADP, because today we've had NFP. So you can see how ADP, this is FOMC. We ran all this sell side, and then we had this run higher going into the Wednesday's close, and then we opened up with a new day opening gap here on Thursday, ran higher above Monday's high. This is so phenomenal. So after running higher into this range here, yesterday I was talking about we are so much on a premium. I want to see lower prices, and then we've had lower prices trading through these buy side imbalances and efficiency. With this inefficiency, we've managed to get into these lows here. We managed to get into these lows here. Very weak prices. going into yesterday's market on close orders macro, and then going into today's Asian session, very weak prices. So we've not managed to have you can see we've gone below this sell side here that I was talking about. We did not manage to have a bullish week. I've talked about how our seasonal tendencies going into August, we are very bearish. So starting from yesterday's price action, we started trading lower, and we've gone through the whole weekly range that we formed on Wednesday. We've gone all through this here, and we are now trading on these lows here. So I've marked out this sell side here because we've been trading lower, and we've just gone below this low. Everything else is just like everything else in Nasdaq is just like what I've talked about in US 500. So let me zoom that in, and this one also, and then we'll mark out area I'm interested in. So right away, my eye goes into this sell side imbalance price and efficiency here, because we're trading at a deep discount, and my mind is programmed to look for bullish prices when we are at a deep discount, and we are looking for lower prices when we are at a deep premium. So to me, this is a discount. This is a deep discount. So we've managed to go below this low here. These are deep discounts. If we go into, not if, I should not really be using if, because we are going to see on the lower time frame what we have here, and we're going to sync this with the 15-minute chart, and we'll see what we have going into, if we'll get a trade higher, trying to trade into this inefficiency here. So my eye straight goes into this 15-minute inefficiency. Let me mark this out. We might not even trade into this 15-minute inefficiency. We might not. We might just be bearish until we close today. We might be bearish until we close today. But I like the fact that we did not touch that 15-minute inefficiency. This 15-minute inefficiency was formed at 10:15. That was in London, 10:15. You can see the same inefficiency here in in Nasdaq. So I'm going to mark out this inefficiency also, and then let's extend this out in time. So I'm expecting in the course of today we'll form a weekly low somewhere here, currently where we are trading at, and then we'll try to see whether we'll manage to get into this inefficiency. This is the best it can do today. Get higher into this inefficiency here. So I'm supposed to extend this to 18. Okay. So we wanna look at US 500 first. Let me just look briefly at a 1 hour chart and see whether there's anything here on the left. So immediately my eye goes into these new week opening gaps here. This was the new week opening gap from 7th of July, and then the new week opening gap from 14th of July. So these new week opening gaps here, let me just extend this out in time. I have a very huge interest for price to want to trade into this new week opening gap. So the idea is we have moved from this premium here, and we are trading into this discount here. So again, my interest is on these new week opening gaps here. This is a deep discount. I want to see price rally into those lows. Nasdaq, let's look at the 1 hour chart. Ideally the new week opening gap should be around the same area. So let me look at a 4 hour chart like this. So you can see how we've managed to get below these. This was last week's low. So this is crazy price action here. You can see how we started this movement low from yesterday, and then we moved through the current weekly low right here. This is the FOMC's low, and then we moved low into this last week's low. So this is very interesting how price is trading at a deep discount in regards to the daily range, in regards to the weekly range, because so far we are forming a weekly low. So immediately my eye goes into this discount week here. We'll be looking at this week here for our tape reading going into today. So let me annotate this here. This is 22,785.5. That is dotted. That's supposed to be now gray. And then 785.5. So that's what I'm looking at. This is supposed to be a target, and it's supposed to be a very deep discount. If we continue to trade low, these are relative equal lows here. My interest goes into that also. We have our new week opening gap here from the 14th of July. Let me annotate this here. This is the last PDRA I'll annotate, and then we move lower into a 5-minute chart and a 1-minute chart and see what we have. This is crimson or red, and then double like that. So these are our new week opening gap PDRA from the 14th of July 2025. Right there. And then the midpoint of that new week opening gap is seated around 718.5. So this is our target for this morning session. If we manage to be weak, a lot more weaker than I expect, I'm anticipating price to rally into this new week opening gap. This midpoint of this discount week here, that's also a target on the 4-hour chart. So 1-hour chart, we're anticipating a movement into these lows here. I've talked about that. So let's look at a 5-minute chart with US 500 and Nasdaq side by side. So it's clear here that we have this discount here. We've gone below this sell side here. So this is, let me dim this out. This sell side has been traded to together with this sell side in Nasdaq. So I'm looking for higher prices just because the weekly is bullish, but seasonal tendencies are like, nah. So the only thing going for me is we're trading at a very deep discount, and I'll be interested in looking for bullish prices from these lows. So let's look at a 1-minute chart, and then we'll annotate today's opening range gap and all these ideas. First, I want to annotate the first presented fair value gap for today. So we've opened up in like 10 minutes now. So this for 30, this was the opening price. We rally lower. You can clearly see the first presented fair value gap is right here. So price has not really even touched that first presented fair value gap right there. In NAS 100, we're looking at the opening price is right there at 430. We beat around this price point here, and then we've not really formed. We've formed the first presented fair value gap is right here, together with the volume imbalances when we want to mark this out. So the first presented fair value gap for today, our first presented fair value gap for today is a very deep discount. Is at a discount price. So let's look at NAS 100 keenly. So we've ran this sell side out. This was the New York session opening price. We've opened up right here. So I want to annotate the opening range gap for today. So it's clearly a discount because we closed yesterday right here, and today we've opened up right here. So these are a very deep discount opening range gap, and that's what I want to annotate. So this was yesterday's closing price. Discount opening range gap, I normally annotate them in olive green, and then we have this price point here, and you can see how price is trading lower. It's very interesting, and it's very interesting how breakout artists are trying to chase that move lower. So I want to extend this to 8 first, and then 16, 30 right there, and then I want to annotate the midpoint of today's opening range gap. So there we go. So the opening range gap midpoint is 23,106.2 right there. That's the midpoint of today's opening range gap. Let me delete this. So that's all about Nasdaq, and you can clearly see we are trading lower. We've not touched the first percent of a value gap. We're trading lower. If you look at US 500, annotate also the today's opening range gap. You can see where we closed yesterday. This was the price. This is the closure, and that is 44.2. So I want to extend this to today's right there, and then take that similar trend line and put it right there on the opening price. So from that level to that level, we can obviously see the midpoint is 6,314.5. So I've already mentioned what I'm looking for. On the downside, I'm looking at these new week opening gaps. Here in Nasdaq, I'm looking at this new week opening gap from 14th of July. That was our last month. So that is what we are looking at right here. So price is trading lower. It's interesting. We're trading lower. We have the first percent of a value gap here. We've not touched it. It's just rallying lower. So it will be very interesting how price will trade when we go through these new week opening gaps here. So I've already mentioned how August normally has a tendency for price to rally lower. If you look at August price actions, price has a tendency to trade lower in the months of August. So you can see this was the 4-hour inefficiency in Nasdaq. I talked about this here. This week here, this one here is the same as this price point here. That is 22,785.7. That's the midpoint of this week here. It's just slightly above this closing price, and this closing price is 22,781.7. So 771, this is 784, just slightly above it. So this is 771. This is the new week opening gap that I'm looking at here, and we have this week here that is has been a beautiful price to rally lower into. So you can see how price closes on this here. This is just a price point that I picked randomly right here, and you can see how price is behaving around that price point, that 780, 85, 786 level. So that's what I'm watching. So I'm gauging what the price wants to go lower into this new week opening up. I mean, that's ideally what price should do. That is ideally what price should do. This is 14th of 14th of July 2025, new week opening gap high, that price point there, and this is the midpoint, and then this is the low. So these also here in US 500. Let's look at this 4-hour chart. So the lower one and the lower one, those are the price points that I'm looking at. This one here, that midpoint, and this low. So this is the 14th of July 2025, new week opening gap. This is the high, and then this is the midpoint, and then this is the low. This is the consequential encroachment. So we've managed to get into that midpoint of that gap. The winning week opening gap from 7th of July, we've gone through that. You can see how price is falling lower. So we've gone through that price points, very, very interesting. And right now we're going to the new week opening gap low. So it will be very interesting. Now that we've gone below the midpoint of this new week opening gap, I want to see price go lower and then try to find strength and trade higher. That's what I'm looking for. So right here in NAS 100, you can see how we've paused around that level here, and we're trading lower again. So my interest is on this consequent encroachment of this new week opening gap from 14th of July 2025. And then we have this sell side here. This sell side is comprises of these relative equal lows here with the wicks. So this low here together with this low forms this sell side liquidity pool right here. It will be best if price trades into this sell side liquidity pool here and then takes that liquidity out, and then I'll be looking for higher prices after it has taken that liquidity pool out. So the time is 4:50. We're inside the first macro of the session. Normally inside the macros, you want to ask yourself who has been profitable, and we can obviously see that people who have been fortunate enough to be weak, people who have been fortunate enough to be bearish, they have been winning. They have been winning, but not for long. Not for long. Why? They don't know that we have a macro that runs from 450 and 510 that goes against everybody who has been profitable. Anybody who has been profitable, they've not taken out their some of their position, if not all of their position, and they have been profitable. I mean, I don't think it will last. To my thinking, I don't think it will last. So normally in NFP days, in NFP days, in Friday NFP days, I like to trade after NFP has come into the marketplace. 30 minutes or 1 hour later, after NFP comes in, right here in the New York session, let me just mark this out just to be clear. This is NFP. This also is NFP. I mean, is more like the same thing right here. I normally love to wait 30 minutes into 1 hour, if not the opening price for index futures, and then I start to look for something in the marketplace to take advantage of in regards to what is the theme on that Friday. What is the theme, and what has been the theme throughout Monday, Tuesday, Wednesday. Has my weekly bias that I came up with before even the week started to trade, has it been accomplished? Where are we in regards to where we are trading at Friday? Have all those ideas been accomplished? Have you have we achieved our goal that we had for the week? And I came into this week here with my bullish prices. I wanted to see Nasdaq US 500 close up on the high, but unfortunately we've not been fortunate enough, and we are not going to be fortunate enough to close up on the high. We're going to close up on the low. Why? Because Thursday we on Wednesday we had a core PCE price index together coupled up with the ADP, and then we also had FOMC in the afternoon session. A lot of high impact events that came up on Wednesday, and then we went into Thursday, yesterday's price action. I was looking for weakness. I was looking for price to trade through that buy-side imbalances and efficiency that was formed on Wednesday's FOMC. So Wednesday did it. Wednesday did its thing, went higher. Thursday we opened up in the Asian session. We traded higher, and then we met the daily high. Or that is yesterday. I'm talking about yesterday. We met the daily high on London in London, and then started trading lower going into the New York session. I was here looking at price. I was talking about how I don't really like it. I was not really liking it where it was trading at. I was trying to look for the daily low, but sometimes you won't find that daily low. Price will still be trading lower and lower and lower and lower and lower going to the market on close orders macro, where you normally think that we've come to the end of that price run, but unfortunately it never does. It never comes to an end, unfortunately. So we were still trading lower. We traded lower yesterday's price action until we closed up on the low. We opened up today in Asia, trading lower, and today we formed a new weekly low. So that is very important to me. That makes a lot of info that price gives me back, and it's obvious that we are trading inside a discount. And what do we do inside a discount? We're not selling discounts. I can never, 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 never will I be ever be selling a discount market. I can't sell a discount market. I am buying a discount market, and that's how the market works. That's how the market works. That's how logic works. You can find right now there's a retail trader trying to chase the move lower. I'm not going to chase this lower of them. I'm going to wait. I'm going to wait for price to tell me whether we've reached the end of that move lower, especially inside these macros, and I'm going to try to look for bullish prices. So we're looking at Nasdaq here. We're trading at 22,780 now. 780. I'm looking at the first presented for value gap here. Now that we've opened up right here and we've moved lower, we are inside the first macro of the session after index futures have opened. This is normally where there's a lot of volume. In the first 30 minutes, there's a lot of volume that comes into the marketplace. And you can see today's volume is not really like it's phenomenal or anything. It has been really one-sided. It has been one-sided, moving lower. And right now we're trading around these price points here. We have our new week opening gap here that I've just explained, and I've explained how I'm expecting price to trade around this new week opening gap. And we're just going to watch how price trades around these price points here. So the time is it's 4:57 my time, but in the New York session it's 9:57. We're getting into the silver bullet time period that runs from 10 to 11. I'm trying to look for bullish prices, but price must tell me that it wants to move higher. So far, I'm not really getting any feedback from price that it wants to move higher still. I mean, not still, but I've not got any information that price wants to move higher. We can still go back into the first present favorable gap here and still attack this low that has been formed right here. But I'm looking at deep discount and I'm trying to buy that deep discount. Right now, where we're trading at a current weekly low. Let me put a higher time frame right next by this 1 minute. So if you look at this 4 hour here, this is the weekly high, this is the weekly low. At some point, we had these as the weekly low. We had this as the weekly high. So what do we do after we made the current weekly high or weekly low? We're trying to go. We're trying to trade the opposite of what the price is selling at the moment. If we're trading at an old high here, we're at a deep premium. So you must wait for price to go into a discount. So we go below Monday's low. Very nice discount, trade lower. I mean, we trade higher. On Wednesday, this was FOMC. We had a run into the sell side. All the sell side was taken out, and then we had this run higher that comes with bias and all these kind of ideas that I came up with before even the week started to trade. We had this movement higher, and then right now, starting from yesterday's price, actually yesterday I was looking for weakness, and the aim was that new week. I mean, the current new day, yesterday's new day opening gap, and then we had this discount week that was a target. If you would be looking for lower prices, ideally, if we were to trade on these highs here, if we were to be still at around 23,680s going into today's price action, I will still be looking for lower prices. I'll still be looking for lower prices. But look at what has happened. We've had this Thursday trade lower, and then with today's price action, we are trading lower. Where are we in regards to price action? We're at a discount. We're at a discount. I mean, in regards to the daily range, we're at a discount. That's why I'm looking for lower. I'm looking for higher prices. But I have objective that price must trade into for me to start being bullish. So one thing we have this week opening gap midpoint. Gaps are always traded to midpoint. Midpoint of gaps is always traded into. So you can see the 5 o'clock candlestick here. That is the 10 o'clock New York time. You can see how we've exactly closed on this new week opening gap high, and we are trading into the midpoint of that new week opening gap. Very, very interesting. Boom, right there. You see that? We're going through it. If we look at US 500, very, very weak prices here. We beat around this new week opening gap from 14th of July last month. We're trading. So the way price is behaving, the feedback that price is giving me, maybe we'll find higher prices going into the close. Maybe not. We just be trading lower and lower and lower. Any inefficiency that we get, we trade lower. Now that we've not touched the 5% fair gap, we might trade lower like this and go into the close while trading lower. I really won't mind about any of that price action. So I talked about these relative equal lows here, pricing after these lows here below. The price here is 20,644.9. That's what we're trading into in the next few minutes. So you can see where US 500 is. You can see the buy side imbalances and efficiency here on the weekly chart. I annotated these inefficiencies the day we closed inside this week. We've been inside this range 1 to 3 weeks, and then the 4th week is when price wants to trade back into the buy side sessions on the weekly. It's very, very crazy price action. If you look at the daily chart of US 500, You can see how we pressed higher. I talked about these wicks here, and you can see in just 2 days time, that was yesterday and today, we managed to go through all this range here, all these days here that we were closing up on the high and trading higher. We moved through that range here in only 2 days. Very, very interesting. So these are relative equal lows here. You can obviously see these here. The low here is 203.9, 6,203.9. The low here is 6,204.2. So 204.2, 203.9 is around the same level. So that 203 level, the sell side resting right there. And then now that we have these buy side balances and efficient weekly chart, I want to see price is low. I want to look at a 4-hour chart for US 500. The lows that I'm talking about are these lows here that we've seen on the daily chart. So these are very, very nice sell side liquidity pool that price wants to trade into. So let me highlight these relative equal lows here. Tell this one below 203 point around 4. 203.9 right there. So sell side resting below 203.9. Let me check this here and then change it to white right there. So look at what we have here. I'll check this here and move it forward. Right here. So let's watch Nasdaq and together with US 500. We've managed to get, especially US 500, we've managed to get below these new week opening gaps here, and we've gotten out of these new week opening gap. We have an inefficiency here. Let's study these and see whether these will start acting like an inversion for value gap. So let's actually highlight these inefficiency here and study it going forward. So remember, it's a silver bullet time period. It's a macro time period. So we are interested in how price will trade around these inversion for value gap right here inside US 500 and inside NAS 100 right there. So normally I would buy this inefficiency. This is an inversion for value gap. Normally I would buy it and try to get a move into the first position for value gap for today. Reasons are, I've given all my reasons. I've explained why I need to be bullish. We're trading, we're trading at a weekly low. We've not seen any shift in market structure. Very, very important. I don't want to be participating in a trade, especially a counter trend trade. So you can see how we've gotten back into this inefficiency here. I don't the fact that we've had this candlestick here. I don't really like this. Again, something that I like to see is the 15-minute chart of Nasdaq. I really love to see a swing low on the 15-minute chart, and that gives me confidence that I'm on side and I can hold on that trade. So you can see how we've had this down close here, and then you can see the next candlestick here is trading higher. So normally 3 points in price action of an inefficiency that comes to my mind is the high of that inefficiency, the midpoint of that inefficiency, and the low of that inefficiency. So we've not touched the low so far. We've just beat around this midpoint of this inefficiency, and you can see the candlestick here is going higher. So my interest goes into this high here. I want to see how price trades into through this high here. That will be very, very important to me. Same thing in US 500. I'm looking at this high here. If we are going to be bullish, I want to see price go through this high here and then try to reach into this level here. It doesn't have to be to do it right now. We can go below this low here because there's another sell side liquidity resting below here. We've seen that. We can go below that sell side here again once more and then start trading higher. That can absolutely happen here. So we are trading still inside this inefficiency here. Look at NAS 100. Price is trying to find support on the upper portion of that inefficiency. That's a good thing. But I don't like the idea of US 500 trading on the lower portion of this inefficiency. Normally, when we are bullish and I want to see higher prices, normally I want to see inefficiencies being left open. I love to see inefficiencies being left open. But when price does not leave inefficiencies open, then that means that we're going to beat around inside the range for quite some time. We might go into distortion or that kind of idea or that kind of price action. We get into a consolidation and then another phase of manipulation, and maybe the reversal aspect of what I'm expecting might come in. So you can see how we've closed right there. Immediately on the next candlestick open, we started to move higher. This is very, very interesting, and you can see what the time is. That is 5:09, just 1 minute, and then we'll have this micro close in. So to me, notice how I say that. To me, this inefficiency here is a buy. Stop below this low here. This inefficiency is a buy to me, and then I will try to aim for this inefficiency here, if not the first present fair value gap. So this low here, this candlestick low is in 2758.2, 22,758.2. The mid is sell side imbalance price efficiency. The midpoint is 22,737.9. So 737 and this is 758. These are 21 points. These are a lot. So I'll really frame risk from this low here. I don't really anticipate this low. This candlesticks low to be taken out. This low, then put an order right here. So those are 44 points. 44 points is a lot. 44 points is a lot. I would really try to buy this here, especially right here now that we've seen this movement higher like this. Very interesting move higher. I really anticipate price to come back into an inefficiency and then try to trade into this fast present of a here for today. Price is moving around a little too fast, a little much. So this is really difficult to frame a trade of very, very small risk, because you can see where my stop loss could have been, that is 693, to where my order could have been resting. I normally like to risk 15 points at most, 15 points at most. And 15 points is like right here, 15 points right there. Very, very small range. It's so wild. So we have a buy side imbalances and efficiency here. Now that we've moved out of this inversion fair value gap here, now that we've moved outside this inversion fair value gap here, I really anticipate price to come back into. There's a very small buy side imbalances and efficiency here. That can be the best ideal to be a buyer right there, and then anticipate the fast present fair value gap for today to be traded into. So if you cannot trade NAS 100 because the ranges are too big, come into US 500. This low should not be taken out. This low is 6,218.7, 218.7, going long at 229. So these are 10 points stop right there. 10-point stop right there. Beautiful, beautiful entry right there. From 6,229, let's say 6,230, 230, put our stop below to 220. That is 10 points worth of risk. So from 230, you can aim for 250 because our first present fair value gap for today is 6,268, 6,268.4. So from 230 level, you can aim for this midpoint of this new week opening gap from 14th of July 2025. The midpoint is 242. So from 230 up to 242, those are already 12 points. Those are 12 points, 12 beautiful, beautiful points that come with a macro entry and an objective that we can clearly frame together with the session buyers and all these kind of trade ideas. So right there is the inversion fair value gap entry, 6,230 buy, and then you can wait up to 240. Those are 20 points in the US 500. I mean, that is so good. That's phenomenal. 20 points in US 500. That's just something else. So we're trading at 6,243. I've framed the bias. I've said why I need to be bullish inside this session, even though we've been trading lower. We're trading below the opening prices. We're trading below the opening price for the week. We are bullish for the session. And I want to see at least price try to reach into this fast present fair value gap, at least in US 500. US 500 will be very, very nice if we rally higher into that fast present fair value gap for today. So if we look at this 15-minute chart, I'm looking at this sell side imbalance buy side efficiency here. If we manage to go into the halfway level of this CB here, then obviously we'll even go a lot more higher. So you can see this here, sell side imbalance buy side efficiency. Best thing it can do, it go through that range because the weekly bias was bullish. The weekly bias has been bullish, and I'm looking for bullish prices inside a Friday. So you can see here 6,245 now, 6,245. I want to see 6,255. So that is the midpoint of the new week opening gap. That is very, very, very nice. Normally, I love trades that I love to see trades that trades that end up trading through the new week opening gap midpoint. I love those kind of trades. I don't really love the kind of trades that my stop loss is just behind the midpoint of the new week opening gap. Like today it's to be trading US 500 because one, the risk is very small. Risk is small. and the return is it's quite good. And then the trade right here, the ability to frame this trade idea is very nice, because my stop loss is not um, is not on or on the direction of the new week opening gap cost of encroachment. That is the new week opening gap, mid gap. My stop loss is not there. That's why my take profit is, because I know price is going to reprice to those price points. The new week opening gap, mid gap, price is going to reprice to that price point. I know, I already know about that. So it's really easy to trade US 500 instead of Nasdaq here, because Nasdaq, we've not really spent a lot of time on the opposite side of the new week opening gap cost of encroachment. That's also a skill that if you stay with price long enough, you start to look at these PD arrays and how price behaves around them. That is exactly how price behaves. So I want to see 250, 250 in US 500 will be very, very nice, and that could be the my trade idea for today. So my bias today is bullish, and I've talked about why I want to see a bullish bias. This is the only reason. Let me actually change this to color blue. And that's it. Bias is bullish. We're at a deep discount in the weekly and daily range. Period. 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 So NAS 100, we've moved from this mid gap of this inversion fair value gap here. That is 22,737. 22,737. We've gone into 23,837. These are 100 points from this mid gap of this inversion fair value gap. This we've moved up 100 points. Very, very interesting. So I want to see price go in US 500. I want to see price go through this whole price action and trade to 6,250. So we're trading at 249 now. We've not even reached into the today's fast present fair value gap. Just imagine, we've not even traded into today's fast present fair value gap. And these are the kind of moves that I really love to see. And most of these trade ideas that normally I come up with, they're normally with the they're normally with the macros. So I think we've traded through 250. The high here is 251. Perfect. Perfect. These are 20 points. 20 points right here. 20 handles. I want to take this screenshot. 20 handles. And that's just perfect. That's just perfect. So if we look at this screenshot here, I don't really like it. And look at that screenshot. Let's actually look at this. I've just dragged this into my second screen. So I'll I'll bring that screenshot here. So this is what we are talking about here. So I've talked about how it's better to trade US 500 today because Nasdaq here is really difficult to frame a trade because it's really too much. If you're risking, let's say you're risking even what $5 a point, it's really difficult to frame a bias here. I mean, not a bias, but it's really difficult to frame risk. That's the correct term. It's really difficult to frame risk here because you cannot risk like 20 points and you're aiming for 30 points. I mean, that does not really make a lot of sense to me. So if you cannot really frame the risk in in NAS 100, you come here to US 500. That's why you should be looking at these two markets. It's really easy to be buying even these buy-side imbalances and efficiency here and put a stop loss behind this here. There are a lot of ideas here to why you should be a buyer right here. Buy-side imbalances and efficiency. If you notice in US 500, we did not even try to the lower end of this BC here. We only beat around this inversion fair value gap here, and this is the first PDR rate that always comes to my mind, the inversion fair value gap. We beat around it. We have a BC here. We enter inside that BC and then we start trading higher. So this low here is around, let's just approximate this 6,225, around 6,225. 225 to 250, those are 25 points. 25 points in US 500. That's just wow. I was just framing this trade from the midpoint of the inversion fair value gap here or on the high. If you notice here, if you have a buy limit on the high of that inversion fair value gap, this just goes without you. This just goes without you. So when we're trading inside this inversion fair value gap, that's why you should be buying anywhere inside this inversion fair value gap, but your risk should be below this candlestick that forms the inversion fair value gap. So ideally your risk should go below this low here because this is also another block. This is a bullish order block because you have a buy-side imbalances and efficiency here. So stop goes below this low here. We're inside that a macro time period. Everybody has been bearish. And what does the macro do? It goes against everybody that has been profitable since London, since the morning session, since 7 a.m. in the New York time, since 8 a.m. Right now we are at 9:50 to 10 in the New York session, and that's the buy right there. Buy, aiming for the direction of the midpoint of the new week opening up, and frame risk. Aiming for 20 handles, and you can see it's right there. It's right there. So we've reached into 250. This candlestick low is you can see we can look at the low here. This candlestick low is 6,225.2. So if you buy 225.2, aim for the 25 points, aim for 250, 25 right there, guaranteed. If you trade Nasdaq did not get into this buy-side balances and efficiency, you can use the inversion fair value gap idea here. Buy it anywhere inside this inversion fair value gap here. Buy it now that especially we've had the confirmation that we moved out of this inversion fair value gap right here. Anybody who bought inside this inversion fair value gap here has been profitable, and guess where we are reaching into the first present fair value gap. And these here, I've just talked about this. I've talked about everything here. I've talked about why we should be bullish. I've talked about why my bias has been bullish. My session bias has been bullish. All those kind of ideas I've talked about. I talked about this inefficiency here. Just don't be surprised. Don't be surprised if we get into this buy-side imbalances and efficiency. I'm also trading in the direction of the current opening range gap. You can see here we have a very huge discount opening range gap here in both Nasdaq and S&P. Right there is our discount opening range gap. I've talked about why we should be bullish. I've talked about why we should be trading into the fast present fair value gap. I've talked about all these ideas. I mentioned these sell side imbalance, buy side efficiency here, and I mentioned why price is finding strength. And I mentioned that if we close at 5:30 in the next 3 minutes, if we close on the upper portion of this inefficiency here, that is in US 500, that is 6,260.8. If we close above 260.8, then we are really, really bullish. We're really, really bullish, and we might get into these highs here. So this has been really an interesting call on price. So if you look at NAS 100 down close candles here, supporting price. Look at the idea here. Down close candles here, supporting price. Down close candles here, supporting price. That's the institutional order flow. This institutional order flow. Down close candles here, supporting price. Another down close candles here. I want to see price trade into the fast present fair value gap here for today. Get into this inefficiency here, and let's look at how price behaves around that mid gap. Right there. So generally, I love NFP weeks. I love NFP weeks, especially with the idea that before NFP, just like Thursday morning session. I mean the whole of Thursday, just before NFP is just really not a good time to be a participant of a trade. You can see here the fast present fair value gap, boom, right there. I want to see price go through that because these are CB. We have volume imbalances on the ends of that CB. I want to see price go through that inversion. I mean, fast present fair value gap for today. So I talked about yesterday. I talked about how I was not really looking for anything to be a buyer or a seller. I wasn't because it's really difficult to be. It's really difficult when price trades on the middle of the range, where you cannot frame a I mean, where you cannot frame a premium or a discount. It's really difficult. It really gets into my nerve. I mean, my mind does not really recognize when price trades around around those price points. Let me just take this screenshot because we've traded today into the fast present fair value for today. Very, very important. With the down close candles here supporting price, we go higher. Down close candle, this is a bullish order block supporting price. Down close candle here supporting price, we're going higher. Very, very nice price action here. So I was talking about how yesterday I was talking about, I mean, I was looking for weaker prices the whole of yesterday, but index futures opened at 4:30, and yesterday they opened up at the middle of the range. If you look at the overall range on the weekly range, We are knit down the weekly high. We are knit down the weekly low. So what do we do when we are in such circumstances? We just don't do anything. We just don't do anything. We must look for a very deep discount to be buying in. We must look for a very deep premium to be selling in. I mean, that's the ideal market. That's the idea. That's the ideal market. I mean, that's how buying and selling works. That's how buying that's how buying and selling works. Nobody can tell me any different. Anything different apart from that, that's just I don't know. I don't know how to call it. I don't know how to call it guesswork or what. And you cannot really be profitable doing anything other than that. You must know how to identify deep premium. You must know how to identify a deep discount, and you must really be very very choosy on whatever trade they're trying to take. And you must just ask yourself, are we in a deep discount? Are we in a deep premium? I mean, those are the trade ideas, kind of ideas that you want to be asking yourself any time you find yourself inside a trade. So you can see how we've gone through into the fast present favor gap. I talked about this fast present favor gap after I anticipated this favor gap here. I said we are going to reach into the fast present favor gap. Best case scenario, I want to see price reach into the mid gap of today's opening range gap. So we have our discount opening range gap here, and mid gap is at 23,108. So you can see how from these lows here, that's 3,737. Let's round that up and let's say 750. So from 23,750, we are trading right now at 23,900. 900. So 750 up to 900, those are 150 points. 150 points, Neto. 150 points. With the buyer, with the everything that I've framed on my session bias, I was still looking for higher prices while we were trading lower. I was looking for higher. I was saying I want to see higher prices while we were trading lower, and I've explained exactly the reason why I want to see lower price. I mean, I want to see higher prices in this morning session on Friday, 1st August of 2025. I mean, my time is the afternoon session, but I work with the New York time period. So you can see the silver bullets here. Buy side balance efficiency, we get into that trading higher. From this low here, this low is 22,820. 820 up to the first present fair value gap low is 876. You can just imagine how many points are these. These are 56 points. 56 points just inside 1, 2, 3, 4, 5, 6, 7, 8, 9 minutes. 9 minutes, 56 points. If you frame bias in something like this here, this is just so phenomenal. It's just so phenomenal. It's just so good. It's so good. So we've traded into the first present fair value gap here. You can see the midpoint here. I want to stay here up to around I want to stay in front of this chart up to around 6, going into 6. We are still trading inside the silver time period. I want to stay throughout this silver bullet, and then I'll close this up going into 6:10 or 6:15 with the closing remarks of what I'm looking for going into next week and all those kind of ideas. So I did not put the macro time period on this here. I've not talked about the opening range today. I'll talk about that shortly. So this is the macro that runs from 9:50 to 10:10 in the New York So we're trading right now in the first presidential value for today. Buy side rests above this high here, this high here, with this high here. These are relatively equal. These are relatively equal. If we're really, really bullish, I want to see price go through the first presidential value gap. I want to see price go through it with um with up close candles. You see how it's trading higher. 904 now. We're trading at 904. I want to see it go outside that first presidential value gap. 3 price points that I'm keenly watching is the midpoint of that gap. That's why I drew this mid gap of that first presidential value gap, the high of that first presidential value gap, and the low, and this low right here. Very, very important price points that I normally love to look at and see how price behaves around them. If we don't manage to get into this buy side liquidity pool here, then we'll start finding weakness from this first presidential value gap and try to reach into this low, because we have a new week opening gap here and the discount. We've been bearish. We might get into this here, but just these, to me, this is enough for today. The whole of today, this has been enough to me. To me, this has been enough. So we have a swing high here. We are likely to form another swing high here if this candle closes on the low, and then we'll right there we have a swing high, another swing high. So let's see how price trades on the low of this first presidential value gap, especially here in Nasdaq. US 500, we've not reached into the first presidential value gap for today. This guess what that means. I wish I had a chart here and I will ask. Guess what this means. It's very easy. US 500 is weaker than NAS 100. It's weaker than NAS 100. At this point in it's weaker than NAS 100. So let me delete this here. I think I've explained how we read institutional order flow. Let me extend this in time view. Yeah. What can I say? What can I say? After I've explained what I expect from price and when it happens, look at the low of this first presidential value gap. We formed a CB here. So let's see how price will behave on that inefficiency, with this inefficiency here. My tape reading skills have really improved. I can't lie. I never used to be this good. I never used to have this patience that I see here. I really never used to, and it will affect everybody. It will affect every new trader. You must sit around with these charts here. Try to talk about what's happening. Talk about what's happening. Talk about your life. Talk about what you do wrong, what you did wrong, where you went wrong. Talk about your losing trades. Talk about just talk about everything. Talk about how price forms swing highs and swing lows. Talk about how price forms fractals. Talk about the PDRAs that are currently in price that nobody ever pays attention to. I mean, not very many people that pay attention to a new week opening gap. I am 100% sure there are not many traders that pay attention to a new week opening gap. There are not many traders that pay attention to an inversion fair value gap before it even forms, before it even supports price. Nobody, no one. Everybody is ever looking at indicators. Everybody is looking at a MACD. Everybody is looking at a moving average, something that is calculated after price has done whatever it has happened. After price has done whatever it has done. Nobody is ever looking at a fast presented fair value gap. Very, very few people. Very, very few people. Nobody is ever looking at an opening range gap. I mean, everybody nowadays is using electronic trading systems. Electronic trading systems, especially this MT5, is not showing the opening range gap and how to use an opening range gap. Not everybody knows how to define a premium or a discount market. I don't really think people know how to do that. And most importantly, not everybody is profitable. It's crazy. It's crazy. Not very many people pay attention to a midpoint of a 4-hour week like the one you see here. Look at how price behaves around that week. Look at the closing price and opening price for these candles on the 1 minute. Look at how it leaves that, trades lower, goes through that, goes through that. This is a very important price point. From that level here, it offers lower prices trading into the midpoint of this new week opening gap. Then exactly I know we have a possible inversion fair value gap here. How do I know that this is a complete inversion fair value gap after we leave it? You see, you leave that inversion fair value gap with the balances and efficiency. This even does not really get filled here. Doesn't get filled. And we're trading higher. Coupled up with time right here. Time right here. This is just something that comes together and it's just so wild. You can really predict this very, very small price swings. You can really predict these price swings here, just like this. Inversion fair value gap here. What are we aiming for? The first fair value gap for today. Discount that premium. Very, very deep discount so far. So far, this is the weekly low. So far, this is the weekly low. Very, very deep discount. What are we aiming for? The first present fair value gap. Best case scenario, what are we aiming for? Mid gap of the opening range gap. Nobody ever really pays attention to that opening range gap. Nobody ever pays attention to the opening price. People even don't know why the market opens up at 3:30 my time or 8:30 in the New York session. People don't pay attention to the midnight New York open price on Monday. That's a very, very important price point to frame buyers, to frame session buyers, to frame any kind of buyers really. So the time is 5:45. I'm looking at a 15-minute candlestick. While we were trading inside this 15-minute candlestick here, I talked about this sell side balance based on efficiency. I talked about if we close on the upper portion of this inefficiency right here, if we close on the upper portion, 22,875, if we close on the upper portion, then we will love to see price trading higher on as much as into the upper portion of this sell side imbalance price and efficiency. And then eventually we will want to see if price has an interest to get above this high here, this highs here, because there's another inefficiency here. So we are still inside this fast presented fair value gap here. We have a swing low here. You see that? We have a swing low here. Let's see if we'll want to reach into this buy side, resting above this high here on the opening price for today, or we'll still want to trade into these lows here. But exactly at 6:10, I'll be off. So let's look at US 500. US 500, same thing here. I've talked about this sensor imbalance price and efficiency here. I don't really want to annotate it here. I don't really want to make my charts dirty and a chart that is showing all these things in price. So we all see this sell side imbalance price and efficiency, and you can see the midpoint, that is 6,280.8. We've touched that price point right there. So we will want to see if this candlestick here wants to get into these highs here, or it wants to remain on the lower portion of this inefficiency. Immediately it closes up at 6. That is 11 a.m. the New York session, the New York time. So you can see how price is behaving from the first present fair value gap. We're going to enter into the second mark of this silver bullet time period in the next 1 minute or so. And then we'll see what we've got. So US 500, we've reached into the upper portion of these new week opening gaps here. This upper level here is the 6th of July 2025 new week opening gap high. And this is the 7th of July new week opening gap low. Very, very important levels. I've not annotated the midpoint of that new week opening gap, but I have the midpoint of the new week opening gap from 14th of July 2025 right there. So we've traded to the high of those new week opening gaps here. You can see the swing high here. Swing high here. We traded back into the midpoint of that new week opening gap. I ran higher into the upper portion of the new week opening gap here, and then again, this now a consolidation around this area here. This is a consolidation. So if we trade lower, I'll wanna see if price has an interest to go through this inversion level gap, or it will find support on a kind of like an optimal entry idea to trade higher again. Those are the kind of scenarios that I like to build, and what price, how it behaves around those kind of scenarios. So we're trading at 22,835, 833, 830s. US 500 trading, we've moved back into 6,242. We moved from 258, 259 level. We're trading at 241 now. We're trading lower. This is interesting. We can obviously see that US 500 is weaker. I've already mentioned about that. Is weaker than NAS 100. So the time is 5:51, or rather 10:51 in the New York time. So I want to take this here, put it on this high. This is the second macro of this session. It's crazy that if you have the idea that we have macros, it doesn't help until you have your narrative right. It's crazy. It's crazy. Somebody may come with an idea that, oh, he knows how to trade smart money concepts, oh, he knows about macros, but if you have the idea of a macro but you don't know how to frame a bias, then you don't really know anything. You don't really know know to frame a narrative why price should be trading to where you anticipate it to go into, that's another flaw. You don't know how to really it can't help you. It can't help you. You'll still blow that account. You'll still do some stupid things inside this 20-minute time period right here. So in NAS 100, we've gone into the first percent of a value gap, and you can see how we've left it right here. I wanted to see price go through the first percent of a value gap and start trading this buy side, but you can obviously see it's not really doing what I wanted to see. It's obviously not doing it. So we've gotten back lower. You can see the midpoint here. It doesn't want to go higher. And you can see the way we've left that inefficiency, that first percent of a value gap. This is very, very important to me. This gives me feedback that we might be very, very weak. It might be very weak and even trade lower and even check out this low here. So far, this is the weekly low, this is the daily low. So very, very tough price point. We can also trade lower like this here, because from this low here to this high, there's a range in price action. I mean, I love to look at the opening range from this low here to from this low here to this high, or rather from this high to this low. I love to what's the word? I love to frame this as my opening range. That high here with the bodies, that low with the bodies, and that's the equilibrium level. That's the midpoint. This is the inefficiency that is on the midpoint. So if we frame this as a discount and we want to be buying, inside a discount right here, we are aiming for what? A premium. We are aiming for a premium. So this inversion for value gap here is a discount PDRA. It's a discount PDRA. So what are we aiming for? A premium, and a premium is on the upper portion of this range. On the equilibrium higher, that's a premium. And you can see inside this premium here, you can see the sell side imbalance based on inefficiency here. That's a target. That's a target. Before even we get into the first percent of a value gap, this CB here is already a target. So the buy here, offload some of it here, and then eventually most of it on the first percent of a value gap. And that's how I frame my discount to premium buys. So we've gotten into this discount here. So we still want to see if price has an interest to go above this first percent of a value gap and find support and try to go into that high, or we'll still find weakness inside this sell side balance price inefficiency and try to trade into this discount, because we are weak. We've been weak. That's just how price will behave if it want to behave like that. In US 5, we are looking at this high here with the bodies into these lows here with the bodies. You can see this the opening range right there. 50%, that's the equilibrium, and you can see that's the inefficiency that's on the equilibrium. Inversion for value gap buy, aim for that CB. Those are 20 points. 20 points. That was the trade that I talked about here. That's the trade that I talked about. So the buy is let's say 6,225, or let's say 230, and then take it up to 250. Those are 20 points in US 500. That's phenomenal. That's very nice. That's very good. Very good. So we are currently trading around the mid gap of the new week coming up in US 500. And at the same time, I'm looking at NAS 100. We're trading in this level here. This is around the equilibrium level of today's opening range gap. Whether we go into these lows here, whether we go into these highs here right now is really none of my business. You cannot be predicting every single move in price. You'll really be surprised. You can't be predicting every single move in price. You can only predict the moves that you back tested, seen them before. You've tapered, you've understood how price behaves inside a deeper discount, instead of in a bigger realm of the weekly ranges, the daily ranges, and the session ranges, and all these kind of ideas. So price is not really at a point in price where I'm really interested in anything right now. It's not. It's not. We are not trading at a weekly low, trading at a weekly high. So what do? I just sit still. Sit still. I've talked about all of this here. Very phenomenal. This is the same idea that I talked about on, when was that? On a Tuesday. Tuesday, while we were forming the weekly high. I talked about that in the Tuesday. I think it was in the morning. I mean, early New York. It was early New York session. We ran into a weekly high, and then we have an inversion for value gap that price leaves immediately and starting lower. Very nice, phenomenal trades. So Nasdaq, if we start trading, if we still remain weak, like we are weak here, I want to see price trade back into this new opening gap from the 14th of July 2025 and trade into this mid gap. So the time is 6 p.m. my time. The New York session, the time is 11 p.m. I really love this kind of trades that come very early after we've had the opening range. I really love this kind of trades here. I've seen them before. I've seen them pan out. Some of them have taken them. So it's really interesting. So we moved out of the first present of gap here in NAS 100. We've not gotten back into this suicide balance based on efficiency here, but we are still trading lower. So I don't really think anything is of my interest right now. I said I'll move out of this chart here going into 6 or 5, 6, 10. I just want to go briefly through my weekly chart for the dollar index, talk about what has already happened and what I expect going into next week. And then I'll talk about what I expect of US 500 and NAS 100. And that will really be it. I'll not be touching anything on these other other instruments. Let me call them instruments. So anyway, want to go direct into daily chart of the dollar index. If you look at the dollar index, especially on the weekly chart, this week has been very phenomenal. So we've had NFP this week. On Monday we had I don't think we had any news on Monday. We had no news on Monday. On Tuesday we had Joel's job openings. On Wednesday we had advanced GDP on the dollar index in the New York session open. Before that we had ADP at 8:15 a.m. in the New York session. And then we had also federal funds rate stroke FOMC statement at 9 p.m. That is 2 p.m. on the New York session on Wednesday. Yesterday, Thursday, we had unemployment claims and core PCE price index. Very, very interesting week this has been. And then on today, we've had NFP and together with ISM manufacturing PMI numbers at 5 p.m. This day, silver bullet at 10 a.m. in the New York time. So it has been a very, very interesting week. If you look at the dollar index on the weekly chart, I talked about this discount here. This is a buy side balance efficiency on the weekly, and together with this inversion favor gap here on the weekly chart for the dollar index. I talked about how we traded into this inefficiency here. We had this swing low here. I talked about how we are inside a deep discount and we need price to trade higher because of the ideas of open float and quarterly shifts and all those kind of ideas. So we're trading inside a discount here. We have a swing low here. We had this bullish week here, and then last week we had a down week, and then coming into this week here, we ran this weekly high here, this swing high, together with these relative equal highs here. Very, very nice here. And today we've come off of the weekly high and traded into and we're trading currently the weekly lows. So this weekly candlestick here is gonna end up bullish. Whereas before we started trading for the week, I was really, really, really anticipating weakness. Daily chart on the dollar index. Let's make this bigger. So I've talked about this. I talked about actually this optimal trade entry here. We failed to go to the lower portion of this weekly inefficiency. Swing low here at a very strategic place discount. We had the confirmation run higher, and then the buy side resting above this high here, together with the relative equal highs here. That is June's high. We ran into that. So yesterday we formed the July high right there, and today we opened up. We've taken out the July high already, and then we've had price trading into this range here, this buy side balances and efficiency after taking out buy side, after taking out yesterday's high, after taking out the July high. Very, very interesting price action. So going into next week, I'm still anticipating bullish prices. This week here, very, very important with the next week's price action. So I'm still bullish on the dollar index going into next week and bearish on everything. We're getting into the August month. So we are mostly futures with the CFDs, we are expecting weakness. So let's talk about US 500. You can see we've been trading higher. We went above this high here. We're at a deep premium. Weakness has started. My interest going into next week is this buy side balances and efficiency. I'll be anticipating a down week because we have a swing high here now. We are getting into August, the seasonal tendencies are weakness. I'm anticipating weakness trading into this buy side balances and efficiency. Is the same thing with the Nasdaq. Nothing really different. If you look at these weekly charts, very, very similar thing here. So we have an outside week this week with NFP. Going into next week, on Monday next week, that's the 4th of August, we will have no news. On Tuesday, we'll have ISM services in the silver bullet at 5 p.m. On Wednesday, we have no news next week. On Thursday, we'll have unemployment claims. And then on Friday, we'll not have any news on the dollar index. We'll only have unemployment change for the Canadian dollar. Very, very important. So next week is also important. Normally, when we have NFP, I normally expect the next week to have PPI and CPI. But you can see how this week is not really the next week. That is next week. We'll not have those PPI and CPI. Instead, they are on the next week, on the next week after next week. CPI will be on Tuesday, and PPI will be on Thursday. That's the other week, and then on that other week on Friday we'll have core retail sales and preliminary UM consumer sentiment. So I've looked at the news, high impact news events for the next 2 weeks. So Next week we might have a very small range week, or if price becomes so wild, we might have even a bullish week. I mean, we'll want to see what we have, but I'm anticipating a down week because the August months are normally there's normally weakness that comes into the marketplace on the August months. So I think that's really it. I'm not going to talk about these other smaller time frames. On the daily chart, you can see what we have here. You can see how we traded inside here today. Other than look at this here, we've gone into a range bound here. There's nothing really is interesting here going forward. So I think we'll look at price in today's afternoon session if it all goes well. So I don't really have anything to talk about price here other than mention this buy side here. I think we might go above that buy side. We have also a sell side here. If we start trading lower into this inversion of a value gap here and start closing on the lower portion of this inversion of a value gap, then be rest assured we'll go below this sell side. So that's really it. So until next time, adios.